Good morning, everybody. Happy Thursday. It's February already. Gosh, this year is going by pretty quick. And even though it's only February, honestly, it feels, if you've been involved in the markets this past week, it really feels like, the markets have been trading for several months this year with this whole GameStop, silver, AMC stuff that's been going on in the markets. And what I want to talk about is trading flow-driven markets. And you know, in this training, I'm going to explain to you what is a flow-driven market, how you can easily determine if a market is flow-driven versus a normal, technically driven market. And lastly, I'm going to show you how to take advantage of the opportunity a flow-driven market provides. And, what you saw last week with GameStop, it was a flow-driven market, right? It didn't respect the technicals, right? If you've been around the markets long enough, you understand that there are different type of market conditions, right? And you can't trade every market condition the same. You can't trade a trending market the same way you would trade a range-bound market. And a flow-driven market is basically a trending market where you have, just this overwhelming flow of trade, of orders coming into the market that is just going to blow through levels, and you're going to sit there scratching your head saying, gosh, I wish I had got in earlier. And just really brief to discuss who I am, and for some of you guys that are new to one of my presentations, my name is Michael Valtos, and I've got a 25-year pedigree of trading at very high levels, right? I've started on the CME trading floor with Dean Witter Reynolds. I left the floor when electronic trading started taking off. I spent a few years on the upstairs trading desk at Dean Witter. Then I left to join an English trading company called EDF Man. It's been around since the 1700s. After that, I joined Commerzbank, right, the big German bank. I don't know if there's any big German banks anymore, but back in those days in the 90s, it was Deutsche Bank, Commerzbank were the two big banks in Germany. And after that, I joined Cargill, the big American privately held trading company, that trades everything in the world, pretty much. They trade the whole supply chain. They account for about 30% of the grain exports of the U.S. and about 25% of the meat exports. But they trade, currencies, they trade interest rates, they trade metals, they trade oil. They're really into everything. And after Cargill, I joined JP Morgan. And this was in Singapore because Cargill had sent me out to Singapore to set up a trading desk there. And after Cargill, I joined JP Morgan as vice president of futures trading. And I spent 8 years. I left in 2013 after my daughter was born at the end of 2012. I wanted to spend more time with my family. And since then, I've been an independent trader and I started orderflows.com. Now, I've talked a lot about order flow, right? That's my background, right? Because sitting on a trading desk, staring at the markets, on time and sales, on a dome, at the bid ask for, basically since electronic trading really started taking off back in the 90s, I've been watching the order flow. And when I left the firms that I was working for and I was trading for myself, the software that was out there available for traders was okay, but I realized, software can do a lot more. And in 2015, I released the Orderflows Trader, which takes the order flow, in my opinion, to a whole nother level to make it easier for traders to understand. Okay, but I could talk about my background a lot, but it's going to bore a lot of people. Really, the whole point of this is about you, right? I want you to have better trading results quicker, right? I want you to get you up to speed on what's the important things to look at in the order flow as quickly as possible. Now, the charts and tools that I use in this training are generated from my order flow software, but what I'm showing you today can easily be applied with other software that's available, other order flow footprint software that's on the market. If you use Sierra charts, if you use the Ninja Trader, the basic order flow package, or you use Motive Wave or any of these others. What I'm going to show you, you can use that with your existing order flow software if you know what to look for. If you don't know what to look for, it's not going to do you any good. You can have the most expensive software out there, but if you don't know how to use it, what's the point? So I'm going to show you how to use order flow to make better trading decisions. And for those of you that haven't got a copy of it yet, I'm going to show you how you can get a copy of my book, Trading Order Flow, for free. If you just stick around to the end, I'll give you a link that you can go and download it for free. So time and sales, right, is basically the tape, okay? It's showing you what's traded, okay, and the volume. It shows the price and the volume traded. Now, actually, it contains all the information a trader needs to understand the context of the market. Problem is, if you're looking at time and sales, it's like drinking from a fire hose. The amount of data that comes out is so fast and so quick, it's going to bury you, right? There's just too much. We're not all born in the matrix, right? We don't have computer chips in our head to understand what's happening in the time and sales, right? And you can see on this time and sales here, within seconds, you're trading a lot of contracts, and some are green trades, some are these are orange actually, but the colors matter, right? Because some is trading on the bid, some is trading on the offer, right? And there's quantities that obviously that go with it, but it's telling you as the market is moving up, what's being traded on the offer, or if the market's moving down, what's being traded on the bid. And that's important information. But the problem is most people don't know how to use it, right? It's great information, but again, what's the point of having information if you can't synthesize it, if you can't make heads or tails of it? So traders developed the order flow, basically the volume footprint chart, okay, which takes all that information from the time and sales, what's being traded on the bid, what's being traded on the offer, and put it into an easy to read format on your chart. So you're not sitting there thinking, oh, I'm scrolling through time and sales looking for something. It's all there, all right there on a nice, easy to read chart for you. So before I begin, just a brief disclaimer. Please realize trading involves risk, right? And I think we all saw that recently with this whole GameStop situation, right? There's people that made a lot of money. There's people that lost a lot of money. So just as quickly as you can make money, you can lose money in the markets. Now, markets have different conditions, okay? Another way to think of it is like the rain, right? You could have your normal rain where it's nice, oh, hey, honey, come outside, take my picture, I'll put it up on Instagram, it's a nice weather. Or it could be, this typhoon type rain, which, is like being in the shower. I've lived in Asia for 10 years, and, the type of rain that we get there is completely different than the type of rain that we get in central United States, right? I live now in Chicago area, and we don't get these typhoon heavy rains. And the market's the same way. There's times where the rain is nice and normal, where it's just rain showers. It's nice. You go outside. Oh, look at me, I'm in the rain. Or then there's other times you say, oh, guy, there's no way I'm going out in that rain. Now, markets have the different conditions, right? There are normal market conditions, and there are flow-driven market conditions. So in other words, think of it like this. Don't make too much out of it. It's market's trending or ranging, right? And knowing what condition the market is exhibiting is going to put you ahead of many of the other traders who are just trading the market one way, right? You can't trade a trending market the same way you would trade a ranging market. Now, what's sort of the difference is flow-driven markets, right, which are trending markets. Why do they trend? Well, they have longer-term trading participants involved. Okay, technically driven markets have little long-term trading participants involved. And it's a bit like if you've ever been whitewater rafting, right? You go down the river, it's nice and calm. That's your technically driven market. But then when you start hitting the rapids, that's your flow-driven market, right? You're just reacting. You're hanging on for the ride, and you're enjoying the ride. So why does participation matter? Well, depending on who's actively participating in the market is going to determine how a market reacts, right? You're not necessarily trading price. Oh, we traded this price, I got to react. You're trading sort of the reaction by other traders to price. So if there are big traders in the markets, the ones who can really move the market, right? If they are not participating on a particular day, what do you think the market is going to do? Is it going to move very much? No, probably not, right? But if you can notice, right, if you could pick up in the order flow that, yeah, big traders are active, what do you think is going to happen? Big traders just don't buy and trade, buy and, try to make scalp 3 or 4 ticks or a couple of points in the market. No, they buy and hold. They buy and put it in their back pocket and wait 3 months, 6 months, right? They're the ones that are expecting the market to move, and their buying or selling is so big that it's going to cause the market to move. So you want to pick up on those that activity when it's starting to happen, right? The best time to get in on a trend is when it's first starting, not after it's already moved. So normal market conditions. Now I'm just showing you a normal bar chart here for simplicity purposes. Markets generally respect levels, the half back level, the 50% retracement, the 38% retracement, fib levels, pivot points, this yellow line up here is the opening price, and you see the market come up, test that, sell off, come up, test that, sell off. Normal market conditions generally respect levels in the market, whereas a flow-driven market is a one-way street. It just blows right through, the highs of the day, just keeps going higher. This was the Nasdaq a couple of days ago, right? It just, you know, one-way street straight up, not respecting any levels, not respecting the high of the day, not respecting the previous day high, not respecting the value area high, respecting nothing. It's just going, right? It's driven by flow. So flow-driven markets have high long-term trading participants involved. Technically driven markets have little long-term trading participants involved. Technically driven markets are driven by technicals, and who trades the technicals are the short-term traders, right? The intraday traders. You don't see big hedge funds looking at, oh my gosh, we have this level here, I can't trade. No, that's not how they think. So who are the big size traders? Well, it's the banks, it's the hedge funds, the commercials, the real money accounts, the central banks. People that think, central banks do get involved in the market, and they are long-term traders. They buy and hold. They're not getting out next week. They buy some more, they buy some more. They don't care if the price is going up or down. If they have to buy, they buy, right? But their activity, it shows up in the tape, shows up in the time and sales. The problem is for most traders, they can't see that if you're just looking at a normal bar chart, right? Because all you're doing is just looking at traded price. You're not looking at volume. That's why traders go to order flow charts, go to footprint charts, is because it's more useful and traders are able to better organize the data, right? And that's really what it is, right? It's about organizing data in an easy to read format. The footprint chart, the order flow, it's not the holy grail. It's information though, right? And it's information that you can use to maximize your trading results. So when you think of a technically driven market, right, what is it? Well, it's based on technicals, technical analysis, support and resistance, fib levels, pivot levels, etc. And a technically driven market, is your normal trading day, right? If you're familiar with volume profile or market profile, it's the big D-shape day, right? Because the market is respecting the levels. It respects the high, the low, the value area high, the value area low. It respects the point of control, etc. But you know what? A lot of times technical levels are not respected, right? The market just blows right through them. And oftentimes, traders just say, when a market isn't respecting levels, oh, well, it is what it is. The market's, it's not my day in the markets, right? They just chalk it up, say, oh, I had a failed setup here. They don't take the next step further and try to understand that something bigger is at play in the market, right? Because what's happening is it's a flow-driven market. When you have a market that's taking out technical levels one after the other after the other, if you try to get short at new highs on a flow-driven market, you're just going to get loss after loss after loss. Just after, same thing for a market that's falling, right? Keeps falling, falling, falling. On a flow-driven market, it's going to keep making new lows the rest of the day. But if you're trying to trade it as a normal technical market, you're always trying to buy that bounce off the low, bounce off the low, bounce off the low. Problem is you keep making new lows and you suffer loss after loss after loss, right? You have to be able to adjust as a trader, right? Trading is all about change and recognizing when the market conditions have changed. And that's where order flow comes in, okay? Now, I'll be honest, order flow is not for everybody. There's people that just can't wrap their heads around it, or there's people that are more longer term traders. Do they need it? No, maybe they're more fundamental traders. Okay, fine. But, for those that are willing to take the time, put in the work, order flow is going to be very rewarding. It's going to help them understand the market. Today, earlier, I got an email from a user, just got the software, order flow software, and he's saying, it's really now starting to make sense to me, right? I'm finding I'm taking better trades and I'm being able to manage my trades better. So the order flow footprint is going to give you insight into the market that you're not going to see on a normal bar chart. Okay, so this is what is this? This is the Japanese yen. This is a 5 minute chart, right? And the market here is coming down, making these new lows, and then all of a sudden you got this nice green candle up. You got some buying coming in here off the low. You hit the low, can't go any lower. A lot of traders would see this as a bullish sign, right? Because why? Because you're at the low, you see buying coming in, right? If you're trading as a technical normal market, you're thinking, okay, yeah, we made the low, can't go any lower after 15 minutes. It was a great buying opportunity. But if you're watching the order flow, you would know that, even though this is looks like a bearish sign, it's actually not. Okay. And you can see this is right here. This is where the market, the previous chart I was just showing you right here, this little green arrow, right? Which, it looks bullish, but it's actually misleading you in a sense by following price and what's happening in the price action. And the market just continued to drop, another 30 ticks. This is Japanese yen. It just went lower and lower and lower. But if you're trading, oh, this is my little bounce. It's starting to go back up. I finally got confirmation. I got the green candle. No, by watching the order flow, you would know that it's actually bearish instead. So remember, okay, a flow-driven market is dominated by longer-term time frame traders, right? Think back of what just happened with GameStop, right? It went up. Obviously, there were a lot of short sellers, but one of the reasons why it went up is and it's still up today in the sense that it's still up relative to a couple weeks ago. You have people that are buying it with no intention to sell it, right? Diamond hands, people that don't, they're long-term traders, and generally, other than this recent GameStop stuff, the long-term time traders are the really big money in the market, and they don't respect technical levels, right? They don't think, oh my gosh, this market's too expensive. I can't buy it here because relative strength is off the charts, or the market's overbought. The people don't understand that market could go from overbought to more overbought to more overbought, more overbought to extremely overbought to off the Richter scale overbought, right? Big bankers, they're not thinking, oh, we're coming into a support level. I'm not going to get short here. Flow-driven markets just blow right through these levels with impunity, right? People don't say, well, we're at this, all-time high. I can't buy here, or taking out yesterday's high. I can't buy here. Flow-driven traders are saying, just buy it. They've got orders to fill. So what are levels? Well, there's support and resistance, there's daily highs and lows, there's overnight highs and lows, there's fib levels, there's pivot levels. There's so many different levels you can come up with. It's funny because I was joking with somebody about fib levels. They're big fib traders, and I was telling them, I trade because they're like, well, I trade a 987 tick chart or a 612 or 512 chart and stuff. I'd be like, well, I trade the 629 chart. Wow, 629, what is that? Some hidden levels? No, it's my birthday, June 29th. Um, and some of these things sometimes it doesn't make much sense. So how do we know? Right, this is a chart I was showing you earlier, the footprint chart. How do we know that this is a good opportunity to get short? Right, right off this high, right? Because now you finally got some buying coming into the market. Shouldn't you be looking to get long? And some traders are going to say, now this is what happened prior to this chart I just showed you. Some traders are going to say, well, the market has been selling off, and it's been trading lower. But honestly, that's a lot of Monday morning quarterback, right? It's easy to look at a chart after the market sold off and look for reasons. It's a bit like Bitcoin. Bitcoin goes up, people look for reasons on why it went up after it went up, or if it goes down 20% in a day, they come up with all these reasons why it went down after the day. And as a trader, you got to make your decision now, right? You can't do after the fact trading. When you're at lows of the day, you got to be asking, are we going to go lower, or is this it? Is this as low as we're going to go, and we're going to start to rally? Now, this area here, right, in the box, right? So this is the bar chart, just sort of give you an idea. Yeah, the market had been trading lows, hit the low, and then went sideways. Now it's sort of coming back down to that low. is this low going to be made? And people say, well, it's obvious, right? You look at this chart, it was just going down, down, down. You got to sell it, right? This is what happened in that box afterwards, right? Yeah, the market just sold off another 30 ticks. Okay, well, it's easy to look at a chart and after the fact and say, well, yeah, obviously we had been selling off, right? You come down here, you got to get short again. Well, the day before, a couple of days earlier, we had sort of the same thing. Market traded from the high of the day down into the lows of the day, but it didn't go lower. In fact, it rallied up to new highs of the day. So, it's one thing to look at a chart after the fact and try and analyze it, but in real time, as a trader, you got to be making a decision in real time. You can't trade a chart after the fact and go back in time and trade it that way. So what made this a great short opportunity? Well, if you're looking at the order flow, okay, every time there was aggressive buying on the low of the day, it couldn't build on it. There was very little continuation. Now, in order flow, we have what we call a divergence. Now, there's bullish divergences, there's bearish divergences. I'll get into the details of those in a second, but down here, right, this is from the open. We traded down into the lows. We had two bullish divergences, which should be bullish, right? The market you would expect to rally because what's happening? You're at the lows of the day and you see aggressive buying come in. Okay, what does the market do? It just goes sideways. Are traders getting rewarded for their effort? No, everyone's coming in buying this low, but they're not getting rewarded because the market's not going anywhere. So when we come back to that low right here, we have another divergence. Okay, so now this is your third divergence. Okay, and most traders are expecting a rally again because you have divergence. Technically you should be buying, right? You got aggressive buyers coming in at the low. Now they're doing it again. But the market doesn't rally. Instead, it sells off. And this is a trade setup that I always use to define a trending market. Okay, now we'll get into the details, the specifics about it in a second. But by the time we hit this third divergence, I'm already looking to be getting short, right? Because I've got a lot of bullish information in the market, but I know the market's not rallying, okay? Because who's buying it off these lows? Well, it's a technically driven market. Traders, the short-term traders that, oh, we're at the lows, I gotta buy it, right? That's how people are trained to do. You buy lows, you sell high. And if you're trading at lows, that makes it easy for you because you're at the lows of the day. So remember, who moves the markets, right? Well, it's not just market is just isn't just made up of buyers and sellers, right? It's made up of aggressive buyers and aggressive sellers. The traders who lift the offer or sell into the bid. Now, there's also passive buyers and passive sellers, people that work a bid and work an offer. So you got to understand even though there's buyers and sellers, you have aggressive buyers, you have passive buyers, you have aggressive sellers, you have passive sellers. And all this information, these different types of traders show up in the time and sales when a trade is executed, but it also is going to show up in the footprint chart. Now, you and me, we're small traders, right? As you know, we're not going to move the market no matter how aggressive we are. Okay, there's always going to be a bigger trader out there that's going to bully us, and don't get bullied. Just follow what they're doing, right? Follow the big guy that's going to move the market, right? But more importantly, you want to follow the big size aggressive traders. Now let's pause, okay? Because I'm going to get into a little bit more advanced stuff for you guys. There's three building blocks of order flow. There's delta, point of control, and imbalances. Delta is the difference between aggressive buying and aggressive selling. The point of control is the price level in the bar with the most volume. And then there's imbalances, which is when aggressive buyers outnumber aggressive sellers by a certain ratio. Usually it's 4-to-1, but you could adjust that or more and vice versa. Okay, so you got to understand some of the data that you're being able to use from the order flow in your analysis. And divergences deal with delta. So delta is, again, it's the net difference between aggressive buying and aggressive selling in a bar. When someone aggressively buys, right, they buy at the market, they lift the offer, that registers as +1 in the delta. If they aggressively sell at the market, so if they sell the bid, if they sell at the market, that registers as -1. Now, every bar has a delta. It could be positive, it could be negative, it could be zero, right? When it lands on zero, it's just more of coincidence than anything else. Um, the strength or weakness of the delta gives traders a clue as to what's happening in the market right now, right? Remember, you got to trade in the present. So delta, right? Most software, order flow software, will show it on the bottom, right? And you can see here this market was going down. Yeah, we got negative delta, which is what you expect on a market that's moving down because it's showing you sellers are in control. But now you start seeing positive deltas, which technically is bullish, right? You're at the lows and you're seeing aggressive buying coming in, right? You see people coming in lifting the offer at the low. Now, sometimes it could be short covering or long liquidation, depending on your highs or lows. But you always got to be paying attention to who's in control of the market. So how do you spot a flow-driven market in the order flow? Well, you look at divergences. Okay, now there's different types of divergences. There's bearish divergence, there's bullish divergence. A bearish divergence in the order flow is when you have a new or equal high with negative delta. So you're at your high of the day, but you have aggressive selling coming in. Imagine you're at your high of the day. If you're expecting the market to go higher, you want to see aggressive buying, not aggressive selling. A bullish divergence would occur at the low of the day, right? It's when you have a new or equal low, but you have positive delta. You have aggressive buying coming in at the low. So, think about it, right? And there's somebody I know, a few years ago, said they thought they discovered the holy grail to the market, divergences. Well, you're at the high of the day and you see, and if selling comes in, right? Aggressive selling comes in, you got to short it. Well, sometimes yes, sometimes no. Okay. And it's important that you have software that's going to highlight that to you to show you when you have a divergence in the market rather than sit there and try to analyze the market bar by bar. There's a lot of information the market is giving you. Have software, let your software show all this information to you so you can make the decision. You spend your time not analyzing every trade that comes through the market, but rather tell you what's happening based on that trade and let you make the decision. Now, the Orderflows Trader software, my software, I recognize that this was an important piece of information, and my software highlights that to me when there's a divergence in the market so that I could sit back and say, let me now take this divergence and put it in context of the market. Okay, so this is our Japanese yen chart again. So we got a few bullish divergences here. As the market opened up here, you have a divergence right on the in the same bar that you open, but then you got a divergence, and then a little later you got two divergences. So I know that we sold off. Now I got some aggressive buying coming in, and that's bullish, honestly. Okay. Now a bearish divergence is the opposite, right? You're at the highs of the day, and you have aggressive selling coming in. So you can see here, right? These two bars have this down triangle, which tells you there's bearish divergence, right? You're at the high of the day, you got negative delta. At the high of the day, you got negative delta. That's aggressive selling. But as you can see, the market didn't do anything. He said it just made new highs. Well, you can say, Mike, you just told me that if I have bearish divergence, the market should go down. But you're showing me examples where the market's going up, right? And it's sometimes easy for traders to get confused because they just take things at face value, right? You got to put it in context of the market. And there's an important saying is, what doesn't happen in the market is oftentimes more important than what does happen as expected. So, what doesn't happen as expected is as important as when something expected happens. So if you're expecting the market to go down based on your analysis and it doesn't, does that mean you're wrong? Well, partly, yeah, you're wrong, but it's also telling you, it's giving you a very important piece of information that, hey, there's something bigger at foot in the market, right? You analyze all you like, but if the market's not doing what's expected, it's probably telling you there's something else going on in the market that's much bigger than your technical level or your analysis is leading you to believe. Everyone likes to say, well, yeah, all the information available to traders is in the market. Well, it's not. There are people that have access to information that you and I and many other traders just don't have and will never have. Now, What I want to talk about though is, the flow-driven market and how you could recognize it. So, you have a divergence and it should either be bullish or bearish, but when you start putting together strings of divergences that are failing, that's a sign, right? That is a sign that the market may be a flow-driven market. So what I like to look for, well, I don't go out of my way to look for it, I just see it on the chart, is when there's two divergences that are violated, two divergences that happen relatively, soon within, of each other, I'm watching for the third divergence, because if that third divergence is going to get violated, chances are the market's going to run. So this was the third divergence right here. Okay, so I had two earlier back here, it's not on this chart, that failed. Okay, because one was a little higher, the next one was on this low of the day. Now I'm coming down here, I got another one. Okay, what I'm looking for, I just put in a stop in right here. I'm not looking for this market to all of a sudden rally. If it does, great. But what I'm looking for, the market's got a stronger propensity to break down. Okay, so I know at this low of the day here, this market keeps pounding down. Okay, every time we got the aggressive buying coming in, it's not enough to move the market. And then look what happens, right? It breaks through that low. You got the heaviest volume of the day. You got a very strong negative delta, so aggressive sellers are definitely in control. You simply put a buy stop, or sorry, in this case, a sell stop, because we're at the low, right below this low of the day to get into your trade. Let the market confirm that, yeah, you know what? It's flow driven. There's bigger traders at the helm that's going to move the market. Just go along for the ride. Now, this was the E-mini chart the other day. Okay, so this is 10:30 Chicago time, right? I've got a divergence here. Well, 10:33, another divergence. You see the market starts to come off, comes back up, makes a new high. Another divergence, aggressive selling coming in. You got negative delta, so I know there's aggressive selling, but the market's not going anywhere. Traders that are selling it here aren't getting any reward for their effort, right? They're just selling it. Maybe they're taking profits, but there's somebody that's happy to buy it, right? Boom, market makes another new high. Up here, another divergence. So I've had 1, 2, 3 divergences in a span of about, what is that, about 20 minutes, okay? So at this point, I'm looking, well, if we're going to break 61 and a half or 62, that's where I'm going to be looking to get long, because now I know I've had reasons to be shorting this market that are not working, right? The aggressive selling is coming in after we make these highs, but the buying is just too much, right? People are getting run over, right? So you see, this was the third imbalance here, right? This one right up here at 37.61 and a half. Does the market move? Well, it starts to go off a little bit, right? It comes off from 61 and a half down to 54. Okay, it's a nice 6-point move, 7-point move, but it's just hanging around, right? You got aggressive selling, but it's not really strong enough to move it anywhere. So, but I'm still interested. If we're going to come back up here, I know I've had aggressive selling, but it's not enough to move the market down very much. If we're going to come back up, I think it could be off to the races. And what did it do? It came right back up here, 61 and a half, 62, shot all the way up to 77, right? Buying on the breakout of the third failed divergence, right? You had first divergence here, second divergence here, third divergence here. I'm just sitting here I just put a buy stop in here, okay? Comes in, fills me, trades immediately, all the way up to 66, 66 and a half. It comes back. How much heat did I take on the trade? If I'm getting long at 61 and a half or 62, it only came back to, what is that, 59 and a half? 2 points of risk for what? A 15-point winner. So flow-driven markets, they tend to be more fundamentally driven, right? Technical levels are being driven over. See what I did there? Driven. They're not being respected. These technical levels, right? The high of the day is not being respected. Why? Because long-term traders, long-term time frame traders specifically, they have orders they need to fill, right? They don't care about the high of the day or the low of the day. What you're seeing is clear price direction. Okay, here's crude oil. Yesterday or the day before, February 2nd, right? Divergence, 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 54.75. Okay. Now I know this one failed. This one failed. I'm going to be watching to see if this one fails, right? I don't have to get long immediately. I mean, you can always buy a dip, but for me, it's a little safer. Just I put my buy stop in here at 76. Okay, if it comes back up here, takes out that high. I think I've got a good opportunity for a nice trade. And what happens? Boom, it takes out the third divergence right here. Okay, then it puts in another couple divergences. See, the market doesn't do anything. It doesn't really sell off. You're getting long at 76. You're risking, what is that? 5, 6 ticks, right? For what? Long at 76, you can see it just moved all the way up to 91, but a bit later, all the way up into the 55s, 55.10, 55.20, all the way up to 55, 26. I'm not saying you'd sell it right up here, but you're getting long in here. How much risk are you taking? You got a little bit here, he pulls back a little bit here, pulls back a little bit here, even a little bit here. Oftentimes there's a lot of traders would sort of inverse this chart. Imagine, and I know a lot of traders that would get short up here, and it's trading 90. They don't get out thinking it comes back down here to 70. Their entry price 75. They're 3 ticks, 4 ticks in the money, thinking this trade's finally going to work. Comes back up here again. Oh, okay, I'm in the money. I'm not going to cover it. You want to be above this blue line long rather than short from above this blue line. This is the third breakout right here. This is where it happened. The breakout on the third failed divergence. Now here's NASDAQ. Again, on the first of the month, just a couple days ago, divergence, divergence, divergence. So 13,197 and a half, right? I know this is my level. I just put a buy stop in here at 97 and a half, 97 3/4, 97, or sorry, 98. Okay, I'm looking for the market to keep moving. Because why? Because I'm thinking that, okay, maybe we're in a trending market, a flow-driven market, that there's maybe something fundamentally I don't know that's happening in the market. Okay, boom, boom, boom. You get a 70-point rally off of that. And that's just all by looking at divergences in the order flow. Now, earlier, you had a 70-point pullback here, okay, before it started making these highs, but you didn't have any divergences there. Maybe at these divergences, people are looking for a 70-point pullback like you had here, but instead, as a trader, you should be adapting to what's happening in the market. And it's telling you there's bullish flow coming into the market. If we take out this third divergence, chances are it's just going to keep going up and up and up. So hopefully you can see how order flow delta, specifically divergences, gives you vital information as to what can happen next in the market. But again, delta and divergences, these are just parts of the order flow generated information. Okay, you can look at other information like imbalances and point of control, but using order flow is like having a treasure map, right? Now, it's not going to give you the exact route, but it's going to give you the route to know where you should be going in the market. It's going to give you a better understanding of what's happening in the market. And what separates winning traders from losing traders is not having an edge. Edges come in many forms, right? It could be a piece of information that other traders don't have, or something they don't recognize, or something they don't see happening in the market. Order flow gives you that edge because you're going to have information other traders don't have. You're going to be able to see things happening in the market that they're not going to be able to see, like a market sweep, or an stacked imbalance, or a lot of things, or market weakness. So hopefully in the last 40 minutes, you'll agree that this has been time well spent. Honestly, I can't cover everything in a quick 40-minute training session, but I've got a special offer so you get everything you need to know about order flow. And if you act fast, I'll give you a special deal, okay? It's the Orderflows Trader software, right? It's, in my opinion, the best order flow software available to a user. Now, I admit I'm a bit biased. Now, it runs on NinjaTrader 8, doesn't run on TradingView, doesn't run on TradeStation. And what it is, it's the volume footprint chart. The charts that you saw in this presentation are generated from my software. So you can see where there's a divergence in the market, okay? And that's just one of 17 pre-programmed order flow tools, right? I could do 16 more presentations on just each unique order flow tool in the Orderflows Trader software, right? That's just one. The divergences is just one little app on NinjaTrader. It takes a couple minutes, basically import the software into NinjaTrader. You don't even need templates because the software defaults are set up to my defaults. And normally I sell this for $8.99, but it's really like trading order flow and putting it into a programmer so you can see what the big traders are doing in the market, right? I spent 20, 25 years trading at very high levels on the institutional level. What I did in the markets is being translated into my software. But I realized having software is one thing, you got to know how to use it. And I give you access to a bunch of education, right? I don't just say, here's the software, go figure out order flow on your own. No, because you won't. It'll be a waste of your time. So what I give you is education, right? You give you access to my order flow trading course. There's 20 lessons. Normally I sell this course for $297. You're gonna get it for free. You also get access to my Inner Circle video series, which is 56 videos on advanced order flow analysis, tips, tricks, on reading the order flow. And normally I sell this for $497. You're gonna get that for free. So the software, the training, and the Inner Circle access, that's $1,600, almost $1,700, but you're not going to pay that. But again, I realize that, it's one thing to watch courses, watch videos. What you want is some live action, right? And each week, Tuesday nights, 7 p.m. Central Time, I do a weekly live group training where you can come in, ask questions about a specific market, about something about the software, and I'll answer that with you. So even if you say, well, Mike never answers his emails, every week you're invited to this and you could attend. So, say you sent me an email and I missed it, right? You could come in here and I'll address your issue. Sometimes, people buy software, then you want to talk to the guy. They charge you access for that. I mean, what's that about? So you're going to learn more about order flow in these weekly sessions than you thought possible, right? Because it's one thing to watch videos that came out a couple of years ago. What you really want to know is what's happening right now in the markets. What's the best form of analysis that you can use to understand the markets? So if you add all this together, the software, the training, the weekly live training, it's almost $1,900, almost $2,000, but you're not going to pay that. It's just a one-time payment of $749. What you're going to do is you're going to go to orderflows.com/oft3, right? And it's only going to be $749. There's no more weekly payments that you got to make, monthly recurring payments as some of these softwares out there, they want to bill you forever, make you a customer for the next 10 years of paying $99, $200 a month. No, it's just $749. A lot of traders say very nice things about the software, and how easy it is to use and how you can see what's happening in the market. Sheila says, the software, Orderflows Trader software, is very helpful. I can see what's really happening in the market. So what you got to do, you go to orderflows.com/off3, scroll down, takes you to the button down here. Click this button to get started. Go to orderflows.com/off3. Takes you to PayPal. I don't get your PayPal information. Now, do realize, right? Once you pay, the information gets sent to your email that you use with PayPal. And if you don't get it, you should also check your spam folder. Sometimes people forget to check their spam folder, or they use a different email address for PayPal than their regular email address. I don't know your regular email address is different, right? It goes to your PayPal address. But I want to also give you the Orderflows playbook, right, which also has additional trade setups in there, right? Normally I sell that for $297. You're going to get it for free today. So get started now. Go to orderflows.com/oft3.html. I put the links in the chat. There's no monthly payments or anything like that, just a one-time payment to get started. So what you're going to get is the Orderflows Trader software, trading courses, Orderflow trading course, Orderflows Inner Circle video series, the Orderflows playbook, and you get access to the weekly live group training. And if you can't attend due to time zones, that's fine. It's recorded, and you'll get access to the recordings as well. So if you want my book, go to orderflows.com/book.html, enter your name and email address, and then click submit. The next page after that will take you to the download. So you can download it to your phone, your computer, etc. So get started, right? In life, you got to get started, right? So go to orderflows.com/oft3.html. The link's in the chat. So Anna, I'm going to throw it back to you guys. If you got any questions, just send me an email, mike@orderflows.com, and I'll do my best to get back to you in a timely manner. So
Hi, everybody, and thank you so much for having me here and for spending this beautiful Thursday morning with me today. How is everybody doing? Hopefully, you guys have access to the question area. So, one thing I absolutely love interaction, and I am here to help you guys. So, let's start the presentation. Okay. So I am Marina, the trader chick, and that's me right there. And that's one of my favorite little people who's with me. And I have a question for you guys. Who here likes Cirque du Soleil? Yeah, you guys can come out and just be like, yeah, it's me. And if you think it's a weird question for trading presentation, even more so, because trading has to be fun. And I want you guys to understand that trading is not only sitting down in front of your charts and becoming zombies. So who here enjoys Cirque du Soleil? And if you have not seen Cirque du Soleil, go and see it. I know right now you can't see them live, but you can certainly see them online. So go and check it out because it is truly an experience that needs to be felt by everybody. And as you can see, I am a huge Cirque du Soleil fan. I mean, I think everything about them is just phenomenal, absolutely phenomenal. And mainly the reason why is because they are ordinary people who are doing extraordinary things. Have you ever thought about that? People who are in Cirque du Soleil, they're not born Cirque du Soleil performers. They are truly just ordinary people that are doing extraordinary things. And what it takes to be an ordinary person who becomes extraordinary, the same as it is for successful day trading, is what I really want to talk to you about and understand as well. Basically, these are the four things. There's four specific things that really make the difference between anybody in any field. Obviously, the Cirque du Soleil is just so much easier to understand when somebody's doing something extraordinary rather than somebody is doing something great and let's say they're an accountant, right? But the reality is everybody goes through the same thing. And for day trading, if you are not following these four basic things, unfortunately, you're not going to become a good day trader. So what are they? Commitment. They're years of training and perfecting their mastery. Why is it that we completely understand if somebody wants to be a Cirque du Soleil performer, that they need to have years of training under their belts, right? We know it. We understand it. We totally accept it. Yeah, but day traders or aspiring day traders, they think since I have a couple of bucks, I'm just going to go into the market and throw it at it and then be pissed off and say it's gambling. No, there's no commitment there. Intense focus. Have you ever seen a Cirque du Soleil performer? Their focus is so intense that nothing around them matters because if they veer their focus for even a second, they could die. Literally, right? Day traders, especially if you're focusing, especially if you're a scalper, and I'm personally a scalper, that means that I go in for shorter time periods and shorter targets. I have to have intense focus seeing what's in front of me because literally things could change in seconds. Discipline. So the funny thing about discipline, it's a word that's thrown around quite a lot. And people are like, oh, you're so disciplined. The thing is, discipline is not something we are personally born with. Discipline is something that after you have a very strong strategy, after you have a very strong system, you stick to it. That's pretty much what it is. It becomes a belief. If you do not have a strategy that you are completely trusting, you're not going to have the discipline, right? When you get in the car and when you're driving and there's a red light, do you question it? No, it is the discipline of being seated at a red light. It's the same thing with day trading. You have the discipline of knowing when it is not the time to get in. And it's also discipline of understanding, okay, this is a good reason to enter this trade. That's what discipline is. And trust. These performers have complete and total trust. Complete and total trust, right? Why? They have trust in themselves because they put in the years, they put in the time, they put in the hours. They trust their partners entirely. They trust their routines, which is their strategy, and they trust their equipment, which is their, for us would be our computers, our charting softwares and our softwares, period, right? And our internet and our brokers, right? So all of these things, if you don't have that as a trader, you could just say, sorry, it's not going to happen. I got to try something else. But most importantly, what all of these come down to is confidence, right? That's what it is. It really boils down to that. And that is, you cannot get confident in trading if you're sitting down for the first time and decide to put in money because somebody mentioned something to you, right? That's silly. And unfortunately, a lot of people do that and then say that day trading is gambling, right? Do you think this woman, even for a split second, is doubting that these guys are going to get on their cell phone, or maybe they've never been on a bike before, or that this bar isn't going to hold her? No, she has complete and total trust because she's done this 1,000 times. Traders have to back test 1,000 times before they can become successful. So what do Cirque du Soleil performers, directors, choreographers, and day traders have in common? Way more than you all think. We all hear that 5% of day traders are successful. So what happens to that other 95% that aren't? What is it? They pretty much lack basically the same thing that the Cirque du Soleil people have, or what successful traders have. So the real question is really, what can we do differently from these 95%? And you guys know exactly why those 95% fail. I'm not going to say it to you because we're all smart people. We know. The thing is, are we applying what these people aren't doing? That's the most important thing. Since I can't go into everything that they are doing differently, what I want to focus on today specifically is what will take you guys to your next level of trading. So today's presentation, I am going to be talking mainly about trends, because trends is the underlying foundation of everything we do, no matter what you guys are trading or even investing. So why trends are exactly like tight ropes. Learn all about trends, how to spot a good trend, stay away from sideways trends, and how to use trends for the high probability trade setups. Now, before I continue, before I get into the meat of this awesome presentation, I have a worksheet that you can literally follow along this entire presentation. So go to makingofaDayTrader.com. MakingofaDayTrader.com. You could download the worksheet that I'm going to be now working with the presentation, and you will be getting a replay so you can see this and go through it again. And it's literally what I use to trade myself, right? So again, makingofaDayTrader.com, and you'll get this completely free worksheet for this presentation. All right, so before we jump in, official intro time. So I am Marina, the Trader Chick, and I am an expat living in Antigua, Guatemala, and that is my family. And I am also trilingual. And the main reason I bring up who I am, because once again, I'm going to say it loud and proud. Traders are humans. We are multidimensional. And if you think that it's sitting in front of your charts and just trying to figure that out, unfortunately, that makes it one dimensional. And we're humans. All our experiences, all our decisions, all of our stories that we bring to the table is what makes us a trader. It's who we are, right? And we use it to maximize it rather than diminish it. So I am trilingual. And the reason why I bring up trilingual is because I recognize, after really struggling and thinking that trading was only sitting in front of the charts and being a robot, that it actually is a language and it speaks to us. So being trilingual, I think, helped me recognize that. And now that I talk about it so often, a lot of people who aren't trilingual or even bilingual, they start to recognize that, yes, this is a language. And once you understand it and could read it, it just makes your trading so much easier, right? So I speak Russian fluently because I was a refugee from the USSR. It is my mother tongue. However, my main language is English because I was raised in the US since I was 6 years old. And I've been living as an expat in Central America for almost 20 years. We lived in Costa Rica before. So I actually learned Spanish as my third language. I'm pretty fluent in it, but I learned it in my late 20s. And when you learn a language in your later years, there is a process that you go through. Everybody is going to go through it. It does not matter what your capability is. It's just something we all go through. Everything that you want to first say, you have to first translate it in your brain, and then you get it out. And when somebody responds in that other language, you digest it, process it, you first translate it, and then you can respond. It is a process. It's great when you have really patient people with you. But then one day, and this was what happened to me, I woke up and I just got it. I just got Spanish. It does, I don't have to translate it. I don't have to process it. I get it. I understand it. I speak it. I'm not 100% fluent, but it flows. And that's exactly what happened to me with the market. And once I recognized that, everything changed. And I want to show you guys that. And it all stems from the trends. Another thing is, before I became a day trader, I was a fitness instructor and a travel writer. And the reason why I bring this up is because so many people come to me and they're like, oh, I want to be a trader, but I don't have any financial background. I don't have a math background. I don't have an economics background. Who cares? We don't need that. We do not need that at all. And if you actually watch these financial experts, they're not very smart. They don't really know what they're talking about. A lot of them just want to hear themselves talk. So they're not even competent enough to really give the advice. It really comes from you, and from you understanding what is going on, and from you being who you are. So this is my travel site. This was my first baby online, and I still actually post on here. Obviously, we can't be traveling as much right now. Hopefully that will be changing very soon. But the reason why I also bring this up is because I for me, travel is not a luxury. It is a necessity. And when I became a trader, it was really important for me to have the proper lifestyle so that I could continue with my travels. We normally travel 3 to 4 months out of the year. So with trading, I'm able to do it wherever I go. So again, now I'm about to jump into the meat of the presentation. Everything I'm going to be going through is makingofadaytrader.com. Download it right now for free and follow along. And when you get the replay, you'll be able to follow along at your own pace. So every performer in Cirque du Soleil starts with learning the basics. This is how they have grown their confidence and their trust. Nobody hops on a bicycle 90 feet up in the air on a tightrope. They started probably on a bicycle, just following a straight line on the ground, right? After they mastered those basics, that's when they could start taking it a little bit higher and higher. It's the same thing for traders. We need to master those basics, and that's when you could add those creative moves and routines. But it all starts with the basics. This guy is not about to do flips 60 feet up in the air until he's learned how to do a flip by his feet touching the bottom, right? So what are the actual basics of trading? We could start by learning the 4 simple basics, right? And they all are increments of the trends that we're going to be learning. Now, if you ever think of a tightrope walker, they start one small step at a time, and we have to do the same. And that is when the biggest rewards start to happen, when you start to add those small steps. Okay, remember, these guys did not hop on this today. They've probably been doing it for years. If you're going to be trading, this is the live market for you. Have you put in the time before you got there? So let's begin. Let's dominate that tightrope. All right. So how do we start the dominating of that tightrope? Through trends. Trends, guys. If you guys don't understand the trends and the breakdowns of them, unfortunately, it will be a very difficult process for everybody. Trends. All right. So let's get into it. We all know that there are 3 trends, right? We all know that there's 3 trends. We have the upward trend, we have the downward trend, and then we have the sideways trend. Now, the sideways trend is literally, and I could bet the farm on this, where 90% of your profits gets lost. You could go and look into your journals and your back testing, however you back test and keep track. And if you are not back testing, stop trading right now and start, because you are not being fair to yourself. You are just playing the odds. You might as well just go and throw a dice on the roulette table. You need to have a back testing system. So everybody who has a back testing system and could go back in, I can guarantee you right now that 90% of your profits and maybe even more of your losses are lost in these sideways trends. What are they called? Consolidation areas, transition areas, sideways markets, channeling markets, the chop, indecision patterns, exhaustion patterns, whatever you want to call it is the same thing, right? Recognizing it though is what's going to make all of the difference. So just a really quick breakdown. What is an upward trend? It's when each pivot is higher than the next, right? We're moving here and these pivots are higher than the next as well. This is when we are looking to enter a long. We are buying. What does that mean? We are looking to enter at a lower price to get out at a higher price, right? Excuse me. And that is going long. That is looking for a trending market up. It's the bull market. What is a downward trend? This is when each pivot is lower than the other pivot, right? And it's continuing down. It is a very obvious movement down. This is when you are looking to short the market, to sell. That means you are looking to enter at a higher price, exiting at a lower price, right? And you're taking the profit in between. Now, if any of you are telling yourselves, but I don't do short, I only don't go long, well, then you're not a day trader, because day traders, we trade equally. It is 100% technical analysis. It has absolutely nothing to do with if the market's going long or short, and I'm only going to go for the long because I feel bad for the people going short. No. If you're a real day trader, you understand that there is more than, probably more of your good trades are going to come from shorting. So technical analysis will be your best friend. Now, as I mentioned before, really quickly, I'm a scalper. What does that mean? I go for smaller targets at a quicker time frame. So you could have an overall momentum going up, let's say, right? However, sometimes during those overall trending markets, you will have a retracement or a deep correction, which could turn into a mini trend. So those are awesome. That I call the immediate momentum, and you could really monetize on a quick move in the opposite direction before it changes and continues in that overall momentum. And they are beautiful. So if you understand trends and you understand what's going on, you can certainly utilize that. Now, let's focus on the consolidation areas, those sideways trends, those transition areas, the trader's worst enemy. Okay, so how does it look? This is what it looks like, right? When it's a choppy market, it's a consolidation area, it's a slowdown, it's indecision, right? And as Michael, the presenter before me, mentioned, that we are individual retail traders. We cannot move the markets, right? We cannot move the markets. So during these areas, you cannot be moving the market. You have to understand that this is an area where the market is in indecision, and we have to understand to sit out. This is what they look like. This is a consolidating market. This is choppy. This is grindy. There is no direction, and you don't know if it's going to go anywhere, right? So the main reason why we end up losing more than 90% of our money during this particular kind of market, this is the reason why. Traders, humans overall, we're emotional beings, right? We tell ourselves stories, right? And every movement we make comes from the different stories that we're telling ourselves. And the majority of those stories are lies, right? They're not real. They're not real stories. So if you don't understand what a story is, I'm going to give you a really quick example. For instance, you just met somebody and you really like them, and you want to become more friendly with them. And then they call you up and they're like, hey, I would love to invite you to this party I'm having in a couple of days. And you get all excited, awesome. And they're like, okay, you know what? I'm going to call you tomorrow to give you all the final information. Tomorrow comes and goes, and they don't call you. What do you start to do? You start to create a story. And if you're telling yourself you're telling yourself another bullshit story that you don't tell yourself stories. Everything we do is stories. So the story we normally tell is usually a negative one. Oh my God, what did I say? Maybe they don't want to be my friend. Maybe they're inviting other people who know me and don't really like me. Maybe they just changed their mind and didn't want to, So you put yourself into a pretty bad position, right? You put yourself into a bad place, lose confidence, right? 2 days later, that person calls you screaming, oh my God, I'm so sorry. My phone fell into the toilet. I lost everybody's phone numbers. I wasn't able to contact you. So basically, the story you created for yourself was a total lie. And what happened? You put yourself into a really bad position, into a really bad emotional state of mind, right? That's how it is. Now, traders, we are notorious for telling ourselves bullshit stories. So one of the massive stories we end up telling ourselves is when we're seeing this kind of action in the market. Look, there are two types of traders in the market. Two. One is the trend is your friend trader, right? This is when they're seeing this upward motion, upward trend, and then they're seeing the sideways position, sideways happening, and they're telling themselves, you know what, the market's been going up all day. I'm going long, I'm going long, I'm going long because the market is going to continue going long. Or the other category of traders, and that's actually how I was overall, and still am to some part, but I don't bring my stories in. It's the contrarian trader. So what does a contrarian trader see? So when they see this kind of movement, they say, you know what, the market's been going up all day. It's got to correct. It's got to correct. I'm going short. I'm going. It's going to completely retrace. I'm going short. So here's the deal, guys. Both of those stories are lies. None of them are true because the market is going to do what the market is going to do. And the only thing our job as a trader, especially the retail individual trader, is we sit and we do not enter until we have confirmation. Okay? That's what is the most important part. So stop telling yourself stories. And when you see this, the fact is it's indecision. I'm going to wait until the market makes a decision. And that's the most important part. This is what these areas look like. Okay, this is recognizing these areas, staying out of them because the majority of your money will get lost in that area. Now, how do we even recognize and understand or acknowledge that those areas are happening? And that happens through other areas, which you guys are all, I'm sure, very familiar with, the support and resistance areas, right? You guys all know of support and resistance. Look, the market respects areas, and we have to respect what the market respects. So, what are support and resistance areas? Support area. It is literally the floor of the market. It is the floor of the market. It is when a market is going down and it hits an area 3 or more times, and it could last for a long time. And if it's hitting that area, you stay out because you don't know if it's going to break through or if it's going to bounce off and continue in a different direction. So you have to be listening. You have to read what the market is telling you, and the market is screaming, this is support, stay out. Support area. It's when the market is hitting the floor of the market. Okay, it is not saying that it's going to continue going down, or it's not saying it's going to bounce off. It's just saying this is an area that you need to respect and don't touch. So this is what it could look like as well in a choppy, in a sideways market, right? Bouncing back and forth. Because the other part of it is the resistance area. What is the resistance area, guys? It's the ceiling. It is the ceiling of the market. It is where the market is hitting 3 or more times. Sometimes it can last for a couple of hours. Sometimes it can last for a minute. Sometimes it can last for a couple of days. And yesterday, the day before, there was one really strong resistance area that was there. I'm going to show you a little bit in the live market. You have to respect it because what it is, it's literally your safety mechanisms. If it's constantly hitting that area and it's hit it before and you want to go up, chances are you will be screwed, right? Because it's an area that the market is respecting. So we have to sit and wait until it breaks it or transitions and changes direction. But that only happens when we read the market and understand when the confirmation of that action happens, right? Now, the main question that I get quite a lot from people is, how do you even spot it when it's happening, when it's about to happen? How do you know when the transition area is just happening? And that is from reversal areas and divergences. This is my religion when it comes to trading, because reversal areas and divergences, they are 100% free. They could be done on any charting platform that you have. It is free, and it is able to be put into anything that you trade. It could go from crypto, forex, futures, equities. It doesn't matter. It's all the same, but you have to understand what they are. So what are reversal areas? You guys probably know them as double bottoms, double tops, triple bottoms, triple tops, head and shoulders, right? We've heard of them, but do you guys actually utilize them? And it is amazing when I teach this to my students and they're like, oh my God, I've never paid attention to reversal areas, how it's completely changed their game. And when they add in divergences, they are now literally able to say, to get 90% better at their trading, literally. Like that's how important this is. And it's so simple to understand. So what is a double bottom? Do you see the two pivots that are hitting that green line? And look at the green line on the bottom. I use MACDs. I only use two indicators. It's the EMAs, which is the exponential moving averages, and I use the MACDs. So MACDs I have found to be the least lagging indicator, and that means that it, because indicators are notorious to be lagging, right? Like the volume indicator, especially, it's a little bit lagging. There's all these other ones that are telling you a little bit after the fact. What I love about the MACDs, it tells you before things actually really happen, like when there's a slowdown and when there is weakness in the market, it's already showing us right away with the MACDs, especially when there is divergence and reversal patterns coupled together, right? So, but you could also have divergence on a regular moving, like you see here, this pivot in here, I've already seen that divergence. I'm already on alert that there is slowdown in the market, right? You never want to be on the excuse me, on the side of the market when it's about to be changing direction or going into that transition area. Hang on one second. Okay, so if you're seeing just regular divergence already, that's a really great sign. But I really want to hone in on reversal patterns and divergences because that changes everything. And when you see that, I am not saying that, oh, you have to get in on the opposite end. No, what I'm saying is now is a very high potential that it will either change or go into a sideways market. So what do you do when you see that? Because traders, we have three things that we are doing all day. Three things. We're looking for when to enter, when to exit, and literally the most important part of all, when to sit out. When to sit out. That is the most important part of trading. So this is telling us to sit out. We are not getting in and out and being trigger happy. On the contrary, we want to only look for maybe one, two, at the very most, three really good, powerful trades. Triple top, look at that. They're all meeting there. Boom, massive divergence. Okay, so putting all this kind of together, we've all heard of the breakout trade, right? We've all heard what a breakout is. But if you don't have your areas drawn in or recognized, you're going to miss out literally on the best, the most powerful move in the market, regardless of the instrument you work with. So this is what a breakout looks like, right? I have this resistance area and then boom, I have a breakout. Now, I want to put it all together and really bring it in so you guys understand how that works. And that is all through understanding trends, right? Remember, everything that I just went through with you guys, makingofadaytrader.com, makingofadaytrader.com, you will get all of this through the presentation. And then once the replay comes, you'll be able to go at your own pace and everything. Really, just these things alone will, I guarantee you, will completely take your trading to a different level. Okay, so let's talk about the breakout trade, like really, really, really understanding what the breakout trade is. Again, I want to talk to you guys layman's terms for you to really understand what a breakout trade is. Okay, now imagine another one of your great friends, somebody that one of your closest friends in the world calls you and they invite you to their house and you've been there at least 1,000 times. You're like, yes, great. You hop in your car and you live south right here and they live north. So you got to hop on that highway and just get to their house. So you get on the highway that you've been going forever, full of confidence, you're going strong, but all of a sudden there's a construction site. There's a huge construction site going on and you have to go to the right. You have to go east and there's a big detour, right? I don't know about you guys, but during those detour moments, this is what happens to me. I start to get super stressed because what if they stop showing the detour to take me back to the highway. What if I'm completely lost in this tiny little place I've never been in before? What if they say, you know what, you can't get back on the highway, it's completely broken, we have to fix it, you have to take little side streets all the way to wherever your destination is. I'm stressing out because what if I don't know how to get back? What if I get lost? All these things. What is this? This is that transition area. That's that indecision area. That's that. Are you really going to be taking trades during those types of areas? No. And if you pretend you are, then you're lying to yourself again, because it's an area that you are uncertain of. You always want to be taking trades where you're certain. But all of a sudden, construction worker brings you back to the another area of the highway, which you know, and says, okay, go for it, guys. You are able to go. And you are back on that highway with renewed energy and strength. What is that? That's that breakout. This is where you want to join in and hop in on that trade, right? So you're driving, indecision, boom, they open that highway again and you're going straight up. Now, I want to show you how I do that with my indicators. Like I said before, I use the MACDs to show me strength, and when it's above the zero line and after it's broken, that's showing me a lot of strength, right? And I use my EMA lines from a place where I take my trades. It's kind of like an archer. Have you guys ever seen those archery competitions, right? Whenever they have to do their archery, they always stand somewhere before they throw it at their target. Same with day trading. You can't just go into a big bar because that's silly. You can't do that, right? I mean, what does that even mean? Oh, it's a big bar. And big bars come to an end. You have to have a system. You have to have an understanding, all right? Like if I was to go in here, just because it's a big bar, it doesn't do anything, but it's showing me that there's super weakness here, and then there's a massive area there. Okay, so another bonus tip from Cirque du Soleil performers. They dominate one area. They dominate one area. Do you think this woman is going to get on a motorcycle and start doing motorcycle tricks? No, that requires years of understanding it's a whole other instrument, right? It's a whole other world. So why is it? Why is it that aspiring traders, when they first begin, they want to do Forex futures, indexes, and stocks? It's kind of like, well, it's back to the Cirque du Soleil person. A tightrope walker is probably not going to be, doing the motorcycle thing. It's probably not going to be doing like acrobatics like as other people are, right? So you have to focus on one instrument. Once you dominate that instrument, chances are you won't even want to continue with any others. I personally trade only the ES. I'm not talking about investing. Don't get those two things wrong. Investing is when you diversify. Day trading, one. If you can, even like people who trade in stocks, there are some people that only trade Tesla, only trade Amazon, only trade Apple. Or if they want to go a little bit bigger, they will trade only a sector, maybe only tech, maybe only pharmaceuticals. Forex, they will choose one pair. Futures, I personally do only ES. Crypto, maybe just Bitcoin. So you have to dominate. Dominate it. Okay? Remember, all of this, makingofadaytrader.com. Now, let's go into the live market so I can show you guys a little bit of how I actually work with all of this, right? So here is actually talking about momentums and trends, right? Here is an overall momentum headed up, right? But here is that overall momentum. Now you have this immediate momentum right there. Do you guys see that? This is a small trend and one that I will totally take advantage of and get at least one trade from, maybe at the most two. But when it comes to an end and I have my support area here showing me that it has come to an end, I understand because the overall momentum has been going up. So I am now checking it out here. Now, here's an interesting part. Look at this resistance area that's formed right here, right? So what am I looking for now? I'm going to be looking for a breakout trade because I have this really strong resistance area here, right? So this is how you use it. And I want to just show you how sometimes resistance areas last for several days. Right here, this is a session break. So this is from one day and it continued on, right? It tried to break through. I call these phobos, fake out breakouts, but it didn't really do much, right? So then it continued. It continued on. That is a really strong resistance area, right? It's an area that has been really respected. And it tried to break through, but it keeps on going back into it, right? And look at that. Now we're talking 2 days. Today is the third day, and it finally broke through and is now headed up. Now, I have to understand because if I'm looking here and it looks like it's strength, but it keeps on revisiting that area and it keeps on failing, I know why. It's because it's an area that I have revisited and the market as well, right? And it's broken through. It now tried to give us that immediate momentum, that mini downward trend, failed, and boom, it continued upward, right? So this is how you use it. So another thing that I want to show really quickly is what I use for my actual chart. I use tick charts. So I've literally at this point only have two indicators. I have my EMA line and I have my MACDs. So I don't use the volume indicator, which a lot of people use. And why is that? The volume indicator is a really, really lagging indicator. What I use is tick charts. And tick charts are pretty standard. They are nothing extra special. What it is shows me right here, you can see the tick counter for each bar, how many transactions happen per bar. And it's 610 transactions. That means if it's moving quickly, that means there's a lot of volatility. And we want to trade when their volume is high, right? When the volatility is moving. And that's exactly what this is. So that's literally my other indicator, I guess you could say, but it's just taking out the volume. So it's built into my actual candlesticks. Okay. So that's what my charts look like. This is how I use those areas, everything else along with it. Okay, so let's get back into the presentation. I only have a few more minutes left. Now, imagine if we could do this together every week, like really get into understanding using all this basic language that anyone could understand and at any charting platform, right? I am so excited about this part of the presentation right here because it is what most traders can do to unlock what is holding them back. Look, this is the reality. The majority of traders, especially beginning, we self-educate. We watch videos, we read books, we sit in on trade rooms and presentations. But at the end of the day, how do you know that you are doing it right? How do you know if you're doing it right? Look, let me break it down for you. I've got something very special for you. Okay, when you get the cheat sheet, you immediately get put on an exclusive VIP list. And I want to encourage you to get this free cheat sheet at makingofaDaytrader.com because this could truly be the turning point for you. It is a special invite coming into your box, and it only comes to people who are on the presentation live. It does not go to anybody else, only people that are going to be in this live presentation. Here's what I have for you. A lot of people ask me during and usually after my presentations if I have any courses. And I don't actually bring this up because I don't really want to discuss it, but I do. I have a signature Simplifying Day Trading Futures course. And it is broken down into short, bite-sized videos and explanations that literally show you what I do every time I sit down to trade. And you could do it from any device, any apparatus, your phone, computer, laptop, iPad. You literally be, in essence, sitting with me side by side. And again, I can only make the special invite to people who get this cheat sheet on makingofaDaytrader.com. Okay, now, here's the thing, what I've mentioned before. How do you know you're doing it right? I don't want to just give you this information. I want to sit next to you, with you, and as a special only for the participants only, I am giving 6 months one-on-one coaching and mentoring with me. So remember, go to makingofaDaytrader.com and you will be sent this invite for the 6 months one-on-one. It's included. And on top of that, I am giving an extra special bonus. I have a live trade chat room, and you will also get, on top of working with me one-on-one, just me and you, one-on-one, you also get to be in the live trade chat room, 6 months of a free membership. And it's not only just mentoring with me, but it's being there live implementing. And I do not hire moderators. I don't use people that don't really trade. It's about implementing everything with me. We are going to be sitting together and doing this together. And the only way to do this is through this cheat sheet, because the program and all that I offer is so robust. I'm offering you lifetime curriculum access, so that you have access to it all the time. Now, look, I'm not releasing the price because I want to surprise you. But what I can guarantee you right now is that the price of this is less than the average trade. It's less than the average trade. But with everything, there is a catch. And here's the catch. I only have 25 spots available. Due to my one-on-one mentorship, I'm only able to take on 25 new students. I cannot take on any more because I want to give you my full attention and my full commitment to your trading. Okay, so remember, I only have space for 25 people. Go to makingofaDayTrader.com. When you get this cheat sheet, you immediately get put on the VIP list. You get the free presentation completely for free. You'll get 6 months one-on-one mentorship with me, 6 months membership in the live trade chat room, lifetime access to the curriculum, and you get to chat with me and have me help you all the time. Okay, so makingofaDayTrader.com. And I hope you guys got a lot out of today's presentation. And please stay away from those sideways trends. They literally will get you. And I really recommend the back testing, because if you guys don't back test, you will not know where you are having the most amount of losses. And you also should have a really strict understanding of each setup, not just, oh, this looks good, I'm going in. Okay, you have to back test it first. So let me know if you guys have any other questions. And thank you so much for being here. And thank you so much for having me. It has been so much fun. Thank you, everybody.
Hello, everyone. This is John Thomas, the Mad Hedge Fund Trader, broadcasting to you live from Silicon Valley in California, where things are always happening. And we're going to talk about investing in post-pandemic America, or Dow 40,000. Here we come. So take out your pen and paper to take notes, or start typing into your smartphone. What I'm about to tell you will blow you away and change your life, for I am in the epiphany business. Why listen to me? Well, I do have 50 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, little time out as a Marine combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and I'm still cleaning the oil out from under my fingernails on that one, and now 13 years plus publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who is still working. And the other reason to listen to me is we have a decade of great forecasts for the market behind us. In October 2011, we told you to buy the market at 1180. It is up 217%. If you bought it in 2013, it's up 127%. If you bought it in 27, in 17, you're up 84%. And again, you made 84% if you bought it in 2019. If you bought it a year ago, you'd be up at least 25% and a lot more. And what am I forecasting today? Well, we're looking for another 25% gain by the end of 2021, and I will tell you how we'll get there. My family origins are a little bit humble. If you're going to spend the next 45 minutes with me, you better get to know who I am. I grew up as the oldest of 7 children. lived the typical all-American childhood, played Little League baseball, grew up on a farm in Southern California, and was in the Boy Scouts and became an Eagle Scout. Wasn't much to do in the old days in rural California, except hunting, so I picked up a job as a paper boy for the Los Angeles Herald-Examiner. One of the first papers I delivered covered the Kennedy assassination in 1963. Wasn't long before I found those funny little numbers on the stock pages, bought IBM for 20 bucks and sold it for 30, and suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I'd visited more than 50 countries and spoke 4 languages. Yes, I was a quick learner. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see much of a future in that, so the government sent me to Southeast Asia for a few years of research, where I learned to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. And of course, in those days, doing research meant carrying a 45 caliber Sten gun machine gun. After 10 years of government service, I ended up with a box of medals, which I drag out once a year on Veterans Day. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the war, and covered the rest of the continent all the way to Asia. If you're wondering why I'm so skinny in that picture, it's because China just had a famine where 50 million people died. I don't think they ever owned up to that one. I figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund, and I just noticed there's the old address for Morgan Stanley at 1251 Avenue of the Americas. And yes, the years have been cruel. That's me when I'm in my 30s, a little bit older than that now. And that's me losing the All Japan Karate Championships. Warning, do not enter a karate final with a broken wrist. I rapidly became the top performing hedge fund manager of the 1990s, eventually bringing in a 1,000% return in a decade. But that's when there were only 115 hedge funds in the world. They're now over 10,000. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to fly your own plane around Europe, buy the latest hot car, go marlin fishing, and collect vintage Rolls Royces. This is my entry at Pebble Beach. I sold my hedge fund in 2000 and retired to go into the oil and gas industry. After making a killing there, I missed the stock market, so I started the Diary of a Mad Hedge Fund in 2008, right before the market crash. I remember shorting Bank of America at $50 and covering at 5. I now spend my days pursuing my first love, finding winning trade alerts, but now I do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. Problem is, I haven't been able to visit my Swiss home for over a year because it is closed because of the pandemic. Americans are apparently the most dangerous people in the world to have contact with. There's far more satisfaction leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I can take a $50,000 account, turn it into $500,000, that is far more job satisfaction than I could ever get anywhere else. However, every silver lining has a cloud. This is my 2019 tax return showing I had to pay $5.7 million in taxes on $15.5 million in trading income. I just fall down on my knees and give thanks that I can pay that amount of taxes and not have it affect my lifestyle. That wasn't always the case. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London these days, it's probably me. That's my 1932 de Havilland Tiger Moth. Notice the design flaws, gas tank directly over your head, and a high propensity to nose over. Also, the plane has no brakes. We can only land this thing on grass fields. The ultimate luxury, of course, is to give to those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to wounded warriors. When wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. And that's me at my in-laws' house, looking through the wreckage. They lost both their home and their business. See, here's a SIF box where they're looking for a wedding ring. They eventually found it because it was made out of platinum, and platinum has a much higher melting point than gold. So there is a method to my madness. The roaring 20s are here. The GameStop fiasco created a great short-term entry point for the market, taking the volatility index up to 38 and setting up very low-risk trades. Buy before 20 trillion hits the market. 20 trillion in stimulus is about to enter the economy, and another 10 trillion in QE at zero interest rates. It really is a perfect storm in favor of equities. It's now all about a global economic recovery and risk on, but we are now waiting for the next dip, which COVID-19 will give us. Almost all asset classes have not moved for 2 weeks. It's a world of flat lines, allowing us to collect massively on time decay in our options positions. A bond breakdown took a break, and that is a huge help for financials. Perennial dollar weakness will give us opportunities to buy foreign currencies, commodities, and emerging markets. And if you're wondering why I'm in such a good mood in that picture, it's because I'm flying a P-51 Mustang. If you don't know what that is, this is my friend Geraldine, a World War II fighter with 2 kills to its credit. It's kind of a combination of a jet plane and a piston engine with a 2,000 horsepower engine. Great for aerobatics. So stocks had a reality check because of GameStop, triggered a much needed and long overdue correction. It's a dip you absolutely had to buy. Vaccine distribution has improved up to 27 million, but is still far from turning the economy. The U.S. economy may be back to normal by summer, but stocks the economy will be anything but normal. Dow 40,000, here we come. Share buybacks are making a big comeback, starting with Apple and the banks and even Netflix. Stick with a barbell strategy, and we'll keep rotating back and forth between the two halves of the barbell all year long. Use every dip to buy. It's a 100% risk-on market. In 2021, both tech and recovery stocks run, meaning almost everything goes up. This is our Mad Hedge Market Timing Index. It's an algorithm which gives us high and low targets for every asset class. And you can see we saw this correction coming. We said it wouldn't go any farther than 350. In fact, we only got down to about 368, and then it took off again. We're looking for the market to hit new highs. So here's the barbell portfolio, 50% in big tech. I bet you didn't know that 2% of the U.S. workforce generates 27% of the stock market capitalization and 38% of U.S. stock market earnings. A massively profitable sector of the market to be in. 50% domestic recovery stocks include railroads, couriers, banks, brokers, construction, credit cards, hotels, and online ticket sales. By the way, this group here is far, far cheaper, maybe a third the cost of big tech stocks right now, and that's why you run a barbell. So barbell, of course, we know NASDAQ has been the place to be for the last 10 years. We're targeting 18,000 this year, which is about a 50% gain in NASDAQ, and the big gains will be held by the medium-sized stocks. Microsoft, we're looking for $300 a share. That's now about 45% gain from here. Was 50 at the beginning. 50% at the beginning of the year. We've already made that money. And you can see here our market timing algorithm tells us when we should be buying the market, when we should be selling. And it basically doubles your return over just holding the stock outright. Looking for another small correction, then another run to new all-time highs in Microsoft. They are making major plays in the cloud, moving to subscription services, And of course, everyone knows the pandemic created an explosion in sales of PCs, which just so happen to use Microsoft operating systems. Apple, of course, you all know the 5G fever is here. There's a generational upgrade going on. 1 billion phones need to be replaced in order to use 5G. They also have $250 billion in cash and are a major buyer of their own stock. And we've been buying this ever since it was $2 about 30 years ago. The last buy was back here at 50 bucks. We got another buy signal here, a buy signal here, and we basically have tripled off the March bottom. So keep buying Apple. We're looking for a $200 target. Amazon, you heard yesterday that Jeff Bezos, my old friend at Morgan Stanley, retired. Their global online sales presence is increasing. They dominate in cloud services through Amazon Web Services. They're moving into advertising, healthcare, and of course, any attempt to break up the company because of antitrust reasons will only double the value of the company. You can see we've been buying like crazy. We took profits last August when the tech sideways, 6-month sideways correction started. We're looking for another dip, another run eventually to 5,000 in Amazon, which is up about 60% from here. PayPal up 5% this morning on a 25% increase in online transactions last year. There's a giant move going on into fintech. They've also become a Bitcoin play because they started accepting Bitcoin to accept online transactions. Pandemic also massively increased their business. Guess what? Physical dollar bills spread the virus. Yes, you can catch COVID-19 from a dollar bill if you don't get high first, because roughly 10% of the U.S. money supply is infected with cocaine. Bet you didn't know that. Salesforce is the dominant cloud play in customer relationship management. They're growing exponentially. There's a very solid 20-25% a year growth in this company. And we had this sideways move take place because they took over Slack for $27 billion. That's quite a bite for this company. But it did give us a good entry point, and we're targeting 400 for Salesforce, which is almost a double. Second half of the barbell bets on a massive global recovery in 2021. Upside potential for recovery stocks is far greater than it is for the big tech stocks. Some of these have not moved for 5 or 10 years. They've been dead money, otherwise known as value stocks. Focus on economically sensitive cyclical industries, makes a great counterweight to a high growth technology portfolio, which we just covered. We could spend all of the next 2 years just rotating back and forth between domestic recovery and tech stocks. So Boeing, of course, is one of the preeminent domestic recovery stocks. We've been buying it since it was at $95 last year. We got several buy signals from our algorithm here, and here, and we're targeting $300 a share this year for Boeing, which is roughly 50%. With the end of the trade wars, China returns as a major buyer of Boeing jets, and those who bought on our last webinar 2 months ago did get a double on the stock, right, from here all the way up to here. JP Morgan, of course, if you expect the bond market to crash, which we do, interest rates go up, and nobody benefits more from rising interest rates than the banks. JP Morgan is the quality value play in the banking sector. Their default rates are falling. They are overcapitalized because of Dodd-Frank. They're making a big move into online banking and are about to close much of their expensive branch network. So the profits here are about to soar. And we have a major long in JP Morgan. And we've been buying it really since the March bottom, but really increased our positions going into the presidential election right here. Credit cards, another touchless payment play. I bet you didn't know that 8% of credit card sales were for airline ticket purchases, which should double this year once the airline system gets back into running order after the end of the pandemic. So again, targeting $300, another 50% gain for Visa. Railroads, any major economic recovery, you suddenly have to move a lot of stuff. And nobody moves more stuff than the Union Pacific Railroad because it is the preeminent east-west airline. That means shipping a lot of commodities to China and bringing back a lot of manufactured goods. It's not your father's railroad. It basically has become a technology company in its own right, the way they manage their freight lines. And again, we're looking for $300 a share here. Again, another 50% gain in 2021. Bet you're tired of sitting around in your pajamas or your sweatsuits all year after being in quarantine since March. Retailers will benefit enormously from a return to shopping. Kohl's has one of the biggest balance sheets. The ones who had weak balance sheets all went bankrupt. So here's your play in retail and mall shopping. Of course, any economic recovery, you also move a lot of overnight stuff, and UPS is profiting enormously from the overnight distribution of COVID-19 vaccines. So you not only have the economic recovery, but the COVID play going here. And we're looking for $200 a share in UPS. Already had major moves in the stock after buying it here, thanks to a signal from our algorithm and buying it here. Looking to buy the next dip in UPS. Caterpillar, of course, if you have an agricultural boom, an infrastructure boom, a housing boom, and a recovery in China trade, you need Caterpillar for all four of these things. So, of course, we've been buying the daylights out of Caterpillar since March. Already got a double on it. We think we could get another 50% out of this name this year, taking Caterpillar up to $300. Of course, small caps lead in any economic recovery. That's because they have a lot more operating leverage than big companies. And in fact, the Russell 2000 goes up roughly 1.5 to 2 times the S&P 500 in bull markets, and that is panning out. So, of course, we've been aggressively long in the Russell, already got a double on this. We're looking to buy dips here also. Bonds are picking up steam on the downside. We broke to a new 2021 low this morning, got down to a 114 yield on the 10-year U.S. Treasury. With the GameStop fiasco over, we're now probing new lows. Bonds will soon focus on a 1.9 trillion stimulus package. 100% of that money is going to have to be borrowed, half from foreigners and half from you and me. Keep selling the TLT short, even on small rallies. This could be the trade of the century. Weakening dollar is scaring away many foreign buyers. Just a matter of time before the 10-year hits a 150 yield. U.S. Treasury Bond Fund TLT could plunge from 180 all the way down to 105, taking interest rates from 31 basis points up to 325. And of course, we've been selling every single rally really for the last year. And you can see we got sell signals here, here, here. Our downside target for this year is 140 and then maybe 105 by 2023. So keep selling those rallies in the TLT. This is going to be your rich uncle trade. It's giving us about 2 round trips a month on the short side. Here's the 10-year Treasury yield. We just went from 101 last week to 114 this morning. We're targeting 150 this year, and if I'm wrong, we're going to hit 2% in the next 6 months. Foreign currencies, we expect them to be enormously strong against the U.S. dollar. FactSend gives us a short-term pop in the dollar, but it will be short-lived. Most foreign exchange plays are poised to break to new highs. Any dollar rallies are temporary and short-term. Euro, Aussie, Bitcoin, all doing well. Here's the U.S. dollar basket, the UUP. It's been dying a slow death for the last 2 years. We've had sells here, a sell here, a sell. And once the next breakdown happens, it's bombs away one more time. Australian dollar is our favorite currency. The Aussie is basically a call option on global synchronized recovery, and we see it going from 72 to parity against the US dollar in the next 2 years. Energy, we have had a rally up to $55 on falling cases, but it's just a temporary move. We don't want to get into energy in any way, shape, or form. The entire US grid is converting to electricity. Avoid all energy plays like the plague, could drop by half in the next recession. Here's oil in the last year. You can see we made it up to 55. Our next move is down, maybe to $10, and maybe even negative numbers in the futures market. And you can see we've actually been in a downtrend in oil for the last 13 years. A lower high here, followed by lower lows. That looks like a downtrend to me. So we think we get to visit $10 a barrel one more time. Precious metals are taking a break. It's selling off on the end of a flight to safety bid. Any declines will be temporary as long as quantitative easing demand continues worldwide. There is a long-term bull trend, but we're preferring to buy silver right now because of the industrial play. Turns out every electric car and every solar panel needs silver. Near zero interest rates and collapsing US dollar is another gold and silver incentive. Copper also is another great play to have in commodities by the next big dip in gold and silver. And that's me in the Istanbul gold market doing a little bit early Christmas shopping back in the days when I could actually travel. So here's your upside breakout coming in gold. Silver will move at 2 or 3 times the rate of gold. There is one other alternative investment opportunity, the next trillion-dollar company, and that is Tesla. Battery costs have dropped by 80% over the last 10 years and will fall by another 80% over the next 10, or in 2 years if solid-state batteries can be mass-produced. Tesla is up 12 times from the March low. We expect it to take a break here, maybe move in a wide sideways range before it goes on to new all-time highs. Here is the design of their solid-state battery. They have this working now in the lab. The big question is, can they make 10 million a month of these? They need to be able to mass produce these, and of course, this is what the design is modeled after, a jelly roll. Tesla, we have been really buying this since the IPO busted 10 years ago. So our initial cost is $3.30 after the IPO. That's a 295 move. Our last buys were at 400 and 600. We are targeting $10,000 in Tesla by 2030 in 9 years. This is my latest Tesla buy. That's the 162,000, fully tricked out with the ludicrous mode. Warning, bring airsick bags if you're going to give kids a ride in this car. They may not be used to aerobatics like I am. Here's my first Tesla I bought 11 years ago. Even the best design in the world doesn't protect you from a drunk driver on Christmas Eve. A lot of people talk about Tesla, very few have taken it apart. Here you can see the 1,100-pound lithium-ion battery under the back seat and the honeycomb carbon fiber wheel wells. Don't play with matches. You could probably do okay just buying all the stocks I just mentioned and forgetting about them. But the fact is that these conditions for these companies are changing every day. They're all viciously competing against each other, trying to put each other out of business. If you don't get daily updates on the fundamentals, you could easily get wiped out. Today's big winner could instantly become tomorrow's loser. That's why you need somebody like me to guide you through the thicket and avoid an out-of-the-blue blow-up. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full-time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. And that is me sending you a trade alert from the coast of North Africa. I'm trying as hard as I can to smile because it is a 120 degrees. The harsh truth is you really need my help. The majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that problem is to get educated. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why did dead people do so well? They never sell. Not a bad thing to have in a 20-year bull market. And this is my last broker, Pinocchio, who I met in a shop in northern Italy where the legend began. I've been on my own ever since. You need a real pro to guide you through the market maze. The market is not monolithic, and 95% of it can be completely ignored. There are a few great sectors and a lot of awful ones. You can earn 10 times return on the great ones, but get wiped out by the losers. Let a 50-year veteran like me steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. This is our secret weapon, the Mad Hedge Market Timing Index. It's a artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators all day long. It took 1,000 hours of calculations for mathematicians to create this algorithm and backtest it. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than a human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your profits. I'm not the only one using algorithms. I was walking along the waterfront in Miami last year and I saw this super yacht, and look at what it's called, algorithm. It's obviously working for more people than just me. In fact, some 80 to 90% of all current trading is algorithm driven. This is 3 years of algorithm results. You can see we get plenty of buys at market bottoms, plenty of sells at market tops, enough to do several round-trip trades a year. It's like owning a printing press that knocks out $100 bills. This is our 11-year average annualized return, 38.89% a year. That is 2.15 the S&P 500 with far less volatility. You can see in the spring meltdown, the Dow average was where the S&P 500 was down 40%. We were only down 14% and then bounced back very quickly to new all-time highs. Bill was a struggling tobacco farmer in Virginia who wanted to supplement his fading agricultural income. After making $3.4 million with me, he still farms, but he's now growing grapes in California's Napa Valley for the high-end wineries. Philip was tired of working in the boom and bust of the oil and gas industry in Texas. After doubling his money every year for several years, he now earns a generous living as a full-time trader. Jackie was an Australian hospital administrator who turned $50,000 into $2 million with the help of me and became a major player in technology stocks. She retired in her 50s and now lives a life of leisure. So what do we do about all this? Well, stocks you want to buy every dip, bonds you want to sell rallies, commodities buy dips, energy stand aside, it's going to zero, currency sell every US dollar rally, precious metals buy the dips. If you are not up 75.28% in the past 12 months as I was, you are reading the wrong newsletter or following the wrong trade mentoring service. Up 75.28% in the last 12 months and up 2.15 times the S&P 500 during the same time. You get those kind of numbers, you get to do things that other people don't do, like ride the owner's suite of the Queen Mary from New York to London. When you get to England, you can take the Orient Express to Venice, Italy. Warning, every dinner is black tie, so be sure and bring 2 tuxes when you pack for this part of the trip. And when you get to Venice, you can go island hopping in your own private helicopter. Saves a lot of time. Here's the very long view, and here's where the big money will be made. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create an economic boom that lasts another decade starting in 2021. And that's me watching climbers come down from the Matterhorn from my home in Zermatt. If you think I'm smoking California's most popular product, think again. From 1982 to 2000, the Dow went up 20 times in 18 years. Are you ready for a replay? We're getting the same demographic picture that we did 40 years ago. So we're looking for another 20-fold increase in the Dow from the 2009 bottom to 120,000 by 2027. If you think that sounds crazy, we're already halfway there. We've already covered half of that move, that 20-fold return from the 2009 bottom. There's only another 4-fold gain to go in the next 10 years to get to 120,000. Except this time it's different. Now there's a tech turbocharger, which is hyper accelerating on all fronts, and the pandemic has speeded up the rate of change. As a result, we have far more accelerators for the economy and stock prices than we ever had before. So we'll show you how to play the next 90,000 Dow points. Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 75.28% during a pandemic year. Follow my research and market beating trade alerts, and you'll rake the profits in. Let a Marine combat pilot steer you to big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. Every single trade alert we send out has a recommendation for each one of these three. This is a typical trading month for us. 10 out of 11 trade alerts were profitable. You can see we bought the S&P 500, made 16.3%, sold short treasuries, bought the Russell, bought Amazon, bought Apple, bought Biogen, oops, stopped out of Biogen. We stop out of losers very quickly because we know that 90% of the time the next trade is a winner. And then we bought Palo Alto Networks, made 12%, sold short the yen, sold treasuries, bought the SPYs, and bought gold. It's just a matter of time before stocks break out to new all-time highs. Watch this space melt up going into the end of 2021. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. And yes, that is a 24-inch rainbow trout, which I caught in northern Nevada. Here's how it works. Our algorithm predicted a major upside breakout was underway in Tesla, so we sent out a buy recommendation. And this is what it looks like. Buy Tesla at $202 or best. It's an opening trade. To get $10,000 exposure, you need to buy 49 shares. To get a $1,000 exposure, you only need to buy 5 shares. What happened? Tesla went up 63% in 20 trading days. We put out the buy here. When we get a giant move like this, do we just sit around and pat ourselves on the back? No, we send out a sell recommendation. It looks like this. Take profits, sell Tesla at $349 or best. And on this particular trade, a $10,000 investment made a profit of $7,203 in 20 trading days. We then followed up Tesla with more trade alerts to buy. We bought this dip here, and we kept buying it all the way up until $904, which was the high for Tesla. So here's a history of our 10 baggers that happened in 2020. We got Zoom at the very beginning at $60, rode it up to 600, That is a gain of 10 times. We got Lam Research, which makes global semiconductor equipment. We got a 10.6 times return on that one. Moderna, we got in very early in this because we were interested in their RNA technology for curing cancer. Then the COVID came along. We got a 12 times return on Moderna. NVIDIA, the dominant graphic card maker for PCs, we got a 16-fold return. And of course, Tesla, the 10-bagger of all times, a 10-bagger of 10 baggers, we got a 295 times return from the bottom. So buy before $20 trillion hits the US markets. Joe Biden now has a blank checkbook. He's been spending money like crazy. We've already had 908 billion stimulus packs. We're going to get another 2 trillion in enforced savings locked up by American consumers. Another 2 trillion stimulus package to pass shortly. A 2 trillion infrastructure, a 1 trillion in student loan forgiveness, trillions in money market balances sitting in the sideline yielding zero, about 5 trillion worth, enormous subsidies for alternative energy companies and Tesla cars, and the return of SALT deductions, about $1 trillion worth for the middle class. With my global trading dispatch service, you get instant trade alerts sent out at market sweet spots, about 200 a year, and all the reasons to execute them. Live bi-weekly strategy webinars with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you can consume in a lifetime, and access to a 13-year database. It's a one-stop shop. Learn all you need for every level. This is for individuals who want to understand what is happening to their retirement funds, for people who want to learn how to trade for a living, and for smaller institutions and financial advisors who can't afford an in-house research department. This is global research, trading dispatch. Comes out every morning in your inbox. Gives you the most and more important long-term trends in the market. This is my Mad Hedge top hot tips. Shows you the 5 most important things to do every morning and what to do about them. And you'll also get my total 2021 annual asset class review, given my outlook for every asset class going forward. This is what I'm not going to charge you for the service. I'm not going to charge you $10,000, sorry, $100,000. That's what I charge my big hedge fund clients, and they're happy to pay me because I make them millions of dollars. And I'm not going to charge you $10,000 a year. That's what I charge my concierge clients who get my personal cell phone number so I can act as their personal 911. And I'm not going to charge $3,000. That's the full price of what I'm offering you today on my website. This is the real deal. Not for, creating this product cost me millions of dollars, but the best customer service in the industry, running it costs millions more. Here's the offer you can't refuse. 6 months for just $997. That is a 66% discount to the full website price. To get that price, click on the chat box on the right. We're only making this offer today, and you can only access it through this webinar. I can only take 25 new subscribers at a time. It's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right. Let me make the money for you to pay for your own subscription. You make the trades, discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the chat box on the right. Here's the offer you can't refuse, just 6 months for just $997. And let's see if the chat box is open. And let me look under chat box here. And there it is. There is the link in blue hyperlink. Just click on that. That takes you to a dedicated sales page, which you can only access right now through this webinar. If you subscribe right now, you will immediately receive a trade alert, which you can execute in the market right now with an extremely high probability of success. Don't leave serious money on the table. This is going to be the best trading opportunity of your life. 95% of these trades make money immediately. And to give you a little tease, this is the chart for the trade alert that I'm about to send you. What I'm not going to tell you is this a buy or a sell, or even what sector it's in. So click on the chat box on the right, and you will get this trade alert. And I can look at the price right now, and yes, it's not too late. You can still get in. So click on the chat box on the right. 6 months for just $997. Let me show you how to make the money to pay for your own subscription. I look forward to working with you. Thank you very much, Anna, for having me on today. And I'll take a couple of questions. And let me pop over here to the question box. And let's see what we've got. Well, here's Joseph saying, thank you very much for the alert. Look forward to working with you in the coming year. And okay, here is the link. If for some reason you can't get the link in the chat box to work, go to this page on the internet right here, www.madhedgefundtrader.com/INVEXP, like in Investors Expo, and that will take you right to the chart. Here's another question. Can a beginner use your service? It looks kind of complicated. Actually, about 50% of all of our new subscribers are people who have never traded before. They're people who are just starting to grapple with the implications of retirement, figuring out they don't have enough money to retire, and they need to learn how to analyze financial markets in order to boost their retirement income. So yeah, this is set up for beginners. It's also set up for $20 billion hedge funds. We get everybody in between. So just click on the chat box on the right. And let's see if I've got any more questions here. Okay, is there? Let me read this question here. Will printing of new dollars eventually create hyperinflation and turn the United States into a Weimar Republic and end up with China owning all of the U.S.? The United States financial markets are a self-correcting mechanism. Eventually what happens is interest rates rise with our hyper-economic growth and extremely strong stock markets that we're just entering, and higher interest rates will bring a lot of money back into the US dollar and make it the strongest currency in the world once again. But that is several years off. So dollar weakness for the next couple of years. After that, interest rates start sucking all the money back in. So that gives us a clear run of at least 2 years to make a ton of money in the stock market. Okay, any other questions? Okay, that is it for today. Thank you very much for spending the time with me. This is John Thomas, the Mad Hedge Fund Trader. I see we've already got quite a few subscriptions coming in, and I look forward to working with all of you.